YouTube, coming back to you with another video, financial video today, talking about ETFs 101, or the basics of ETFs. One of the things I'll say before I get started on this video, here's my channel right here. If you haven't seen the Stock Basics 101, something I would recommend before watching this video or proceeding. So if you wanted to open this up in another tab and watch that before watching this, probably a good idea if this is a little new concept for you. But just something to recommend before we get started. So let's go ahead and get started and talking about ETFs and just the basics of how they work and how they function and how you can invest in them. So just to get us started, let me pull up some notes here and this article that I found on Investopedia that helps explain things a little bit better. So to introduce ETFs, what are they? So ETF stands for Exchange Traded Fund. Which is just a big, complicated name, as you'll see, for something that's a little bit more simpler to understand. But you'll notice in finance there's a lot of complicated names for something that's, when you explain it, it's a lot simpler than it sounds. So just so you understand that's what an exchange traded fund is, or ETF. You'll hear people talk about that. So an ETF, or exchange traded fund, is a type of security. So that means it trades just like a stock. It has a price on the open market that if you go up and look up that price, that's the price that it will cost you to invest into it. So that's all that means, is that it's they're saying it's a type of security, and this is a type of security that collects other securities. So basically what you're doing when you're investing in an ETF is you're investing in something that can be traded back and forth like a stock, but they invest normally in terms of a larger portfolio into other stocks. And this makes it so that it's easier for you to invest in a lot of stocks with just one transaction, rather than having to make multiple transactions. Because sometimes, as you'll see with a lot of ETFs, especially larger ETFs that mirror indexes such as the S&P 500, if you were to try to recreate that portfolio of about 500 stocks, you'd obviously have to do 500 separate transactions, and then every time the weightings within the portfolio change, you'd have to do separate transactions for each individual one to make sure that the weightings stayed accurate relative to the index. So one of the benefits to mention about ETFs, obviously it makes it easy to trade back and forth a larger portfolio, so you don't have to do many separate transactions, or you don't have to rebalance your portfolio. Generally, the company that underwrites it will do that for you. So just looking at this Investopedia article that I pulled up here, I think they do a good job of going over ETFs and kind of giving a little bit of a basic view of it, so that it doesn't get too overcomplicated. As I was talking about with the name itself, there's a lot of things that sound super complicated that really aren't once you start to understand it a little bit. But as they say here, an ETF, or exchange traded fund, is a type of security that involves a collection of securities, as I told you before, such as stocks, that often tracks an underlying index, although they can invest in any number of industry sectors or use various strategies. ETFs are in many ways similar to mutual funds. However, they are listed on exchanges, and ETF shares trade throughout the day just like an ordinary stock, as I told you before. And this is where I was talking about the indexing of ETFs. And so it says here, some well-known examples is the Spider S&P 500, or SPY is the symbol, which tracks the S&P 500 index. ETFs can contain many types of investments, including stocks, commodities, bonds, or a mixture of investment types. An exchange traded fund is a marketable security, as I mentioned before on the notes here, and meaning it has an associated price that allows it to be easily bought and sold, so it can be bought back and forth, like I said. Moving down further into the article to get into some of the ETF basics, is that there's different types of ETFs. So as you may have noticed when you start investing, that there's many different things that you can invest in. Therefore, there's different ETFs that invest in individual things, such as it's listed here, bond ETFs, industry ETFs, commodity ETFs, currency ETFs, inverse ETFs. And on the notes here, as you can see, I also mentioned here the idea of leverage ETFs, which I'll also get into just briefly in this video. So basically, all these different things just allow you to invest on a broader scale in some of these sectors, some of these asset classes, without having, like I said, to make multiple transactions. And I'll go ahead and show you some of these, especially some of the industry ETFs and some of the overall index ETFs. So like the ones they were talking about in the article, like the SPY, which is it mirrors the S&P 500 index. So here's this one. Like I said, the symbol is SPY. So obviously this tracks the S&P 500, and it invests or tries to invest as closely as what the S&P 500 does, and mirrors the same assets and asset allocations of the S&P 500, so that you can trade it in and out just like a stock. But you're buying essentially the whole S&P 500, but you can do it with one transaction, which it makes it super easy. But going on to the other individual things that you can do, so like the XLF, which is the symbol for the Financial Select Sector Spider ETF. So this invests in a lot of different financial things. So what this allows you to do, let's say you want a little less diversity, you want a little less diversification, and you think that the financial sector, it's ripe for some upward price appreciation. And so the way you can invest in this individual sector and kind of segregate that from a very broad-based ETF is you can invest in other select sector ETFs, industry ETFs, and you can look some of these up on your own on Google, and it will give you a bunch of different options. You can type in things for like the financial sector, for consumer staples, for consumer discretionary, for industrial or oil and gas, stuff like that. There's a lot of different ETFs out there. If you feel that you have a good understanding of a certain industry and that you think that it's maybe ripe to grow, it allows you the opportunity to invest in that specific thing, and removing all other, cutting basically all other assets out that wouldn't be classified under that. So one of the things you may be asking is, especially when investing in something like the XLF with the financial select sector, you may be like, what does that get me? What do they invest in? What is the financial sector? How do they weight different things? So I'll move over to a site you may have heard of before, which is called Morningstar, or morningstar.com. And this offers a way to, up here you can type in the symbol XLF, and it will pull up. There it is, the Financial Select Sector Spider ETF. And so we'll go ahead and go to that page and pull that up. And this will give you some extra information that is good to look at before investing in something like this, to make sure that you do your full research. And so if I select portfolio here, this will ultimately bring up if we bring it up down here, a list of holdings that they have for this ETF. So what they hold in terms of investments, because obviously when they say financial select sector, that can mean a lot of different things. There's a lot of different strategies of way that you can invest in the financial sector. And so this ultimately gives you, like Berkshire Hathaway, it has a 12.84% weighting. JP Morgan Chase has a 12.38% weighting in the portfolio. Bank of America, 8.14% weighting, and on and on. But ultimately, if I select Show More Holdings, it will walk you through the portfolio, and it looks like it's not quite showing everything here, because obviously it says here there's 66 equity holdings within this financial ETF, but gives you a better understanding of what you're invested in, so that if you really want to do some deep research and you want to look into the individual components of this ETF to see what it tracks and how some of these underlying stocks move, may help you ultimately decide on whether you want to invest in that sector or in that ETF individually. So just some extra research that you can do there to help you better understand what you're buying, because you never want to buy something on the broad basis of you don't really know what it's buying. You just know that it's a very vague idea, such as financial services, which can mean a lot of different things. So just one of the websites that you can use to offer you a lot of different information, a lot of different analysis tools, and like I said before, ultimately the holdings of what they're actually putting in the portfolio. and we'll give you a better idea of what you're looking at. And so one of the last things that I wanted to touch on is just some more niche, I guess you could say, ETFs. Not necessarily saying that these are a good or a bad idea, but there's also, as ETFs have grown in popularity, companies have offered different varieties of them and just different ones that offer you different risk profiles and different opportunities and things that make it easier to invest without having to do so much of the legwork yourself. So one of those would be leveraged ETFs, and so I'll type in LABU, which is the symbol for Direxion Daily S&P Biotech Bull 3 times Shares ETF, which is a huge name, and you may be thinking, what the heck is this? And then you see the chart and you're like, what the heck is going on? This is like this huge move here. So just to give you a preface for this, or to give you an understanding of this, I'll move it to a more recent chart to kind of show you what this allows you to do. As you may have heard from one of my other videos, from things like margin trading, which allows you to borrow money to purchase stocks, ETFs, other securities. What this allows you to do is they ultimately do that for you, and so you can get that extra volatility from something like margin trading, except you don't have to purchase it on margin. But when you're purchasing this, you get the volatility, and you can trade it in and out very, very quickly, and allows you to trade it back and forth just like any other stock, and allows you that liquidity that's there, rather than going through all the motions of getting a margin account, borrowing money from your broker, having to pay all the margin fees and borrowing costs and stuff like that, and then having to go invest in whatever you want to invest in. It really takes all of that out and offers this to you in one whole package, and offers it to you in the form of an ETF, as you can see here with the symbol LABU. And there's multiple different ones. This isn't the only one, but just wanted to show as an example. And as you can see, moved 4.11%. I'll show you one that's a non-levered ETF for a the similar biotech industry. So this is, like I said, levered 3 times. So it makes it move quite a bit more than the one I will show you now, which is XBI. And so this is Spider S&P Biotech ETF, and this one moved 1.37%. So obviously a lot less volatility. This one isn't levered. That's why it's a lot less volatility, but ultimately a little bit less diversified here than something like an S&P 500 ETF. But this one allows you to invest in the S&P Biotech sector, and like I said, is non-levered, so lowers the volatility in that aspect. But if you want to raise the volatility on it, or have the potential for an increased return on your investment, if you wanted to invest in the biotech sector, like I said, the LABU would ultimately allow you to do that. But one thing to note, like I showed you in the first chart when we first showed you this, that it moves a lot more than a regular one will, and so that's something to consider before even considering something like this or as an investment. And it's not meant for everybody. Many people that use this are often speculators or day traders. That's why this may not affect some people so much, because they buy in and out of it. So they're not buying it and holding it forever. They're buying it for small term price movements. Like, let's say somebody bought it this morning and sold it this afternoon and made a cool 4% in one day. That's why people trade this back and forth, and ultimately this gives you the opportunity to do that and to make a little bit more money, but at the same time you're taking a lot more risk because it's levered. And then one other one I'll show you before I close out this video, they mentioned it on that Investopedia article that I showed you, is inverse ETFs. So let me pull one up here. Let's see. Wrong symbol here. There we go. So this is, so as you can see, this one is also a levered, but also an inverse ETF. This is a 3x levered, inverse for natural gas ETN, which I won't get to in this video, but that's another classification of ETFs. There's different classifications that you have to watch out for. Some can be ETFs, others can be ETNs, others can be synthetic ETFs. I won't, like I said, I won't get to that in this video. It'll drastically make this video much longer if we get into that. But just to show you as an example, make the chart a more recent chart. But what this one offers you is it offers you to invest in the inverse chart of the. I can show you the other one. But basically, if somebody were to bet that natural gas is going up, they would not use this chart. They would use the UGAS, which is the same one, except this one is betting that it will go up. So if you were betting that it was going to go up and you wanted to lever that position, ultimately this would be the one for natural gas. But if you wanted to bet that it was going to go down or make money when it goes down, you would do the opposite of that, which is the reason for an inverse ETF that allows you to do that. I'll get into a later video on shorting and how shorting works, because that's how you can bet if you want to make money when a stock goes down. That's how you can do that, or one way that you can do that. What inverse ETFs try to do, they try to offer you that ability to short something without having to short it. I know that sounds a little bit complicated, but it ultimately, just from a basic perspective of what an inverse ETF is all you need to know is it allows you to bet in the opposite way. So allowing you to make money if you think that something's going to go down is all you really need to know with that. So like I said, these are two different, with levered inverse ETFs, are two different ones that are very high risk, and is something that you should understand before even considering these. Always talk to a financial advisor, financial planner. Generally, they will not recommend these to you at all because they are that crazy. But just to give you an understanding of how either modest you can be with ETFs, or how crazy and on the opposite end of the risk spectrum that you can get with ETFs. So that's really the end of the video. Stay tuned for my next videos, and go ahead and give this a like, a thumbs up, and subscribe for more. And let me know down in the comment section what else you'd like to learn. Any areas that I missed that need some little more explanation that can be explained in another video. But let me know down in the comment section, and stay tuned for more.